So creating a digital single market today is one of the priorities of the European Commission, but it's also one of the priorities of the banking sector, definitely, and European companies as a whole. So it's very important to make sure that the right balance is found between consumer protection, innovation, competition, trust, and security, as it was mentioned. I would like to invite now the panelists around me, around this table, to discuss about banking services in the digital single market. So I will invite straight away Mrs. Kallas, so member of the European Parliament, and as presented by Wim already, she's also the rapporteur for the ITRE Committee on the Digital Single Market own initiative report. Is also Ulrik Nødgaard, who is the Chief Executive of the Danish Bankers Association. He was recently appointed CEO of the Danish Banking Association, and in 2015, he was Director General of the Danish Financial Supervisory Authority. Between 2005 and 2009, he was Deputy Permanent Secretary of the Danish Ministry of Economic and Business Affairs. And so now I would like also to invite Mr. Teppo Paavola from BBVA. He's Senior Executive, Vice President, and General Manager of the new digital businesses at BBVA, a Spanish bank. He has recently joined BBVA to lead the new digital business area. Mr. Paavola was Vice President, Head of Global Business, Development and Mergers and Acquisition at PayPal. And also, he joined this company in 2012, but also he had various roles as in executive positions in Nokia, for example, from 2004 and 2012, and he was previously founder and CEO of many startups. I would like now to invite David Andrieux. David Andrieux is a Strategy and Market Intelligence Manager at Sopra Banking Software. Thank you very much, David, for joining us. He's an expert in strategy and innovation and market intelligence. He has a book and 30 scientific papers to his name, plus 7 international academic prizes in physics, whilst as postdoctoral fellow at Belgium Scientific Center FNRS and Yale University in the US. And also he has now recently published a white paper on the future of digital banking. Thank you very much for joining me around this table to discuss all together the financial services and banking services in this digital single market. I would like a warm welcome to our panelists first. So, first of all, I would like to leave the floor to the different panelists to have like kind of initial statement. Of course, Mrs. Kallas, we heard your statement, but I would like to give the floor to first to Ulrik. I would be curious to have your first views on this digitalization of banks, which is ongoing, and like had already started. So please, you have like around 8 minutes. So we are short in time, but 8 minutes, please.
Thank you. I think I want to raise 4 points today. First is a few reflections on disruption and the spread of that. Looking at, I guess, 2 of the most discussed cases in terms of payments area and the lending.
Core business that we've been running for years. Then there are a couple of people, engineer from technology, from customer experience, as well as then go to market on a local level, whose job is to digitalize the existing business. By that I mean that anything that you sell today, you have to be able to sell through digital means, through mobile, conveniently, nice experience, etc. It's not yet changing what you're selling or changing the business model, but basically putting a digital front end to what you've been doing before. And then there's a third role, which is my job, which is new business models. So, and there you could, if I of course wouldn't say this to bankers, but what I said to a lot of startups earlier this week in our open talent competition was that one way to look at this is if you can't win them, join them. And that's what we're trying to do. So within my group, we have different ways to approach building new business. We have one team working on partnerships, one on acquisitions, one which has a venture capital fund, one which has internal ventures, one which runs developer programs. Then we have a couple of businesses. The best known of them is Simple, which is I guess you could call a neobank or in the U.S. Am I running out of my time?
So I think it's I think it's very interesting. Thank you, because I think I will come back to you with also onto the different panelists on this competition issue and why we say banks are afraid of competition. Is it true? I'm not certain when I listen to you, but I will come back to this question later. Just David, you have published a paper about the future of digital banking, I think in reaction to what Teppo said about this new business model or adapting the product to digitalization. What's your opinion on that?
Okay. Well, thank you. Good afternoon, everyone. I guess I come today from a kind of different perspective. As Noemie pointed out, I used to be a scientist, which means that I actually get to do innovation before talking about it. And it's interesting to see that banking has indeed embraced the digital evolution. Now, because if you look at banking today and 5 years ago or 10 years ago, we can do everything pretty much on our mobile. Branches are open space, welcoming. You can even get free Wi-Fi if you're lucky. But that's the easy part. The hard part, as was just said before, is about using digital to develop new services based on digital assets and capabilities, including data, for instance. Now, that's the real difficult part. That's the challenge. And that's where the action is. That's what every fintech is trying to do at the moment. And the stakes are high because the customer relationship is what matters there. If you own the customer relationship, you own the context, you own the data, and you own the revenues from it and the ability to propose a new higher value services. Whereas banks would become, simple back office processors. And that's not a position that you would like to have. Now, on this point, I think I have some interesting statistics, actually. If you ask the customers themselves what they think, they're actually pretty satisfied with the current banking services they have today. We have some detailed statistics on that. But that's not enough, because they are happy with what they have, but they see that innovation is happening everywhere, in every other industry. And when you ask them, well, they actually only 50% or something of the customers see a difference between their bank and the bank next door. And that's not enough. There's a huge need for differentiation and innovation in banking because customers are waiting, they're looking for more, and they're waiting for that to be happening. Whether it's a bank or a non-bank, at the moment it doesn't really matter, as long there are enough trust, and we have actors like PayPal or Amazon that have built sufficient trust in the customer's mind to be credible in that role, as a banking partner. So, but I'm actually pretty confident, as Mr. Skinner, that banks can actually raise up to the challenge. We've seen some very good examples around the world on how banks are actually innovating. BBVA is a great example, the way they open up their systems to let people build new applications and services on their platform using transaction data, anonymized transaction data, for instance. We have other examples of banks going beyond pure financial services products, like Société Générale, who is offering music streaming services. ICBC in China is partnering with e-commerce platform Alibaba. Chinese Amazon, so to say. Or mBank, for instance, in Poland, is offering its customers a new service where the customers subscribe to receive tailored personalized coupons. And now the mBank actually gets half of its revenues, retail revenues, from that service. And the customers are happy, the merchants are happy, and the bank is obviously happy as well. So these are just some small examples on how banks are starting to really innovate and think differently of themselves. They're starting to take a new role, not only as a provider of pure financial products, but as a service provider. And Mr. Skinner also touched on that. The role of banking in the digital age has to evolve. Independently and we've seen some drivers for that change in terms of Bitcoin technologies. Regulations are also accelerating the change, like PSD2 is forcing banks to open up their access to the accounts and so on. But banks are really to survive in the digital age, and they will survive, they will adapt, but they will have to take a slightly different role. They will have to become access facilitators, they will have to become service providers, and they will have to become value aggregators in some sense.
Yes, I think
guess I'm
David,
out of
it
time,
was
so
really interesting also to know how, as regards the different examples you raise during this discussion, is like really banks seems ready to embrace this digital era. But at the same time, it seems that like still some obstacles. And then I will turn to Mrs. Kallas, because you will start also and work with the other members of the European Parliament to think how to build this regulatory framework. If we are talking about regulation, it is even still a question. It's important to build this digital environment. So in your views, what could be these obstacles to this digital single market, and what could be like the key points that need to be improved? I guess there are like some inconsistencies in legislation. I think in e-signature you have mentioned that also, like there's no cross-border e-signature, for example. So what's your views?
It's a very broad question, of course. Just today we had, because we are co-rapporteurs with one other MEP, so we are drafting this together, and I'm a liberal and she's a social democrat. So it's a very difficult negotiations that we have. And actually today we just debated for 2 hours on sharing economy, and the thing is that she was approaching this. She's from Germany, and she's slightly older than me, and she was approaching the sharing economy issue as it is like businesses are selling to consumers, and the consumer protection has to be there, and we have to. But I was trying to explain the essence of the sharing economy, and it's that by introducing this high consumer protection EU laws on these things, then we might kill the sector. We just might kill it because it is not the way it works. It works on the basis of trust. It works because it works on basis of consumer welfare as well. Because if the consumers don't like it, you are out of business because they share the information, and it is just that you can't afford to lose the trust of the consumers. And this is a whole different thing. So of course there are very many issues that I can't really list them all because we don't have time. But I think, to my understanding, if we look at the innovation and we look how the world has changed and developed, then the innovation has happened despite the regulation, or actually just coming around the regulation. So always when we introduce some regulation, it's always in favor of the incumbent, because we only have that in mind. We have that in mind, what is already in place, and then we make the rules for this who is already on the market, and therefore we might shut the doors for those who might come to the market, which is not the benefit of, maybe it's in the benefit of the incumbents only. So I would say the main exercise here is to keep the excessive regulation happening. I think this is the point.
Okay, thank you very much. I think it's quite good to hear also that trust, customer experience, and also security are also part of it, but innovation is key, and then we should avoid those barriers to innovation. You wanted to add something else?
Two things, because I don't know if I get the floor anymore, but two other things that I wanted to reflect on. One was the e-identification. Actually, in Estonia, it came from the banks. It was the bank system that our state adopted. So it was created by them, and now we share it with Finland as well. So it is very good. We would like everybody else also to adopt the same system. But the other thing that I wanted to comment on was the question of data. Of course, the question of open data, big data, it's all the issues that we are also dealing with. But the thing what we have to keep in mind, when we talk about free things, that everything is free, what the consumers must understand, when it's free, you're actually not paying with the money, you are paying with something else. And usually in the digital world, it means that you are paying with your data. So the consumers must understand that maybe sometimes paying with your money is even cheaper than paying with your data.
Interesting comment. Ulrik, do you have any reaction to that, especially as regards your experience on e-signature in your country as well? You mentioned before. So, and also on like the question of the data, the value of data as well.
Yeah, but just to confirm, it's the same story from Denmark, I guess, that the banking sector has been leading in developing this, and I just think that, as I said before, this is really a case where we can show some value to the wider society. In terms of these issue of regulation, I'm very much agree that the issue here is really about allowing innovation, and then let the best man win, so to speak. But there are a number of issues here, and we of course should also respect, perfectly valid policy objectives of fighting anti-money laundering and so on. It's really about getting the balance right, finding that point where you can see the cost and benefits are right, and at least to my mind, looking at, for instance, the recent anti-money laundering directive, you could clearly question whether or not you get the balance right there. Is still, for instance, let's say about the onboarding of new clients, it's still based on the idea that a client meets up in a brick and mortar branch and take his documents there, and then there will be Xerox and so on. There are some exceptions, and it can work in practice, but I think it would be good to move beyond that and have a regulation that is based on sort of the digital point where we are today.
Indeed, like in the current, as you may know, in the current anti-money laundering directive, the fourth now, is still considered as higher risk if you are not meeting face-to-face your customer. Of course,
peer-to-peer lending. It's quite clear, at least from a Danish perspective, that we see a somehow inverse relationship between the degree of disruption, which I think is most strongly in the payments area currently. If we compare that with the importance for earnings. So for instance, in the Danish banking sector, payments measured in a sort of narrow sense is actually only 3% of total earnings, whereas of course the net interest income and so on is a vast majority of income. That's not to say that what is happening in the payment space is not absolutely important. It is, of course. It's the sort of glue that also attracts the customers being in a bank and so on. But just to get a little bit perspective, I think it's important to have to look at these numbers. Let me say and follow up what you mentioned, that indeed we do welcome the challenge from new startups and so on. We think that's the way to go, and that's actually, and that brings me to my second point. In terms of regulation, I think our main point is not about keeping a level playing field or anything like that, but really about having a regulation that does not hinder innovation. And then the market should decide, should it be the creative startup or should it be the incumbent bank that sort of runs with the price? I think that's the important point from a regulatory point of view. And what are the issues in terms of regulation? I think anti-money laundering is clearly one of the areas where we do see attention and we see an importance of getting the balance right. So for instance, in the mobile payment space, allowing the new solutions that really creates value for the customers to work and still, of course, respect the obligations of anti-money laundering campaigns and so on. I think another issue in regulation, which also needs to be addressed, is the whole issue of being allowed to use big data. We recently in Denmark had a change because until quite recently it wasn't really allowed to give banking customers a feedback on their overall spending patterns due to these secrecy provisions in the Danish law, which of course didn't seem proportional in any way. So that was changed, but just to say this is a theme that will probably come up in various other discussions. And finally, in terms of regulation, also the whole issue of profiling, allowing that, which can actually create quite efficient solutions also for the customers if we are allowed to do that on a broader scale. The third point just being that I've heard it was mentioned several times today on what I think is maybe the main asset of banks currently is the trust that people do, even after the crisis, the trust that people have in banks in terms of giving them funds and also confidential private economic data. And I think that's really the number one thing that we should be focused on. And what does that mean in practice? It also means that we should be very focused on the whole issue of cybersecurity and being very ambitious there. And indeed in Denmark we have started an awareness campaign as a joint force together with the Danish government. We and Bankers Association and the government will do a campaign in terms of promoting simple rules of promoting digital awareness there. And that brings me then to my final point. I think I still have some time within my 8 minutes, which just goes to show that I think really the digital area is the area where banks can really show quite powerful that we can create solutions for what I would call the wider society. I think it's quite looking at the mobile payments solutions coming out right now. The pickup is enormously, everybody is quite enthusiastic about them. It does create a whole new image of the sector. I also think in terms of, as was mentioned also by you, e-authentication, we have developed solutions here in Denmark that can be worked or used not only in the banking sector but in society at large. Also in terms of public services, you can use the same system across the board. That just goes to show that this is clearly an area where banks can show their value to society. Thank you.
Thank you very much, Ulrik. Now I will turn to Teppo. You joined recently BBVA to lead the new digital businesses area. How do you see this digitalization of banking activity?
Banking professionals. I guess I'm still in the network of banking amateurs. I've been in a bank less than a year. So I look at the industry quite a lot from the sort of point of view of somebody whose background is more in the technology industry. I think many good points were already made about what's going on in the market. So I'll talk a little bit more about how we are approaching it as a company. But just a couple of words first. So digitalization, it is happening. There's really no way to stop it. There are a couple of ways to look at it. One is that customers want the same convenience from their banking services as what they are used to in everything else that they consume through for example, their mobile devices. And so it's not something about, it's not a question of should we do it or not. It's more a question of how you do it. one of the kind of one is the experience has to be mobile, has to be convenient, has to be similar as what you're used to in other areas. Then the other side is the business models. So I don't think there is a single conference of any industry anywhere in the world where Uber wouldn't be mentioned, like it was mentioned here today, more than once already. But if you think about the core of what an Uber does, what an Airbnb does, what actually in our industry, my old employer PayPal does, what all the alternative lending companies do, all of them they build services to their end customers without owning the assets upon which those services are built. And that is a massive difference. And unfortunately for those people, for those companies who own the assets, actually these companies pick the most profitable parts of the value chain and become better than the incumbents in that. So you know, kind of who then wins in this kind of a market? You know, even when you think about, let's say, alternative lending is good example, and you know, there was a slide up earlier listing all the OnDecks and the lending clubs and the Prospers, etc. I know a lot of those people in those companies, and I would say that half of them, easily half of their management teams actually have a banking background. So you need to understand the industry you're disrupting. And then you need to combine that with technology. And of course, it often is so much easier to innovate when you're not disrupting yourself, but you're disrupting somebody else. I have notes here, even though I should know this stuff by heart. I talk about it all day long, every day of the week. So, and you know, eventually then, if you think about, you know, where will the, you know, who are the winners? One of the key parts of being a winner is being the place where the data goes. Often the data goes to the one who has the customer relationship. And again, if you think about, you know, many of the disruptors in our industry, they are often, you know, ending up with that data. And even if a piece of the action would go, for example, to a bank. So we believe, as a company, BBVA believes this is happening. There's nothing to stop it, and so it's all a matter of what do we do about it. And I think one way to look at it is actually our company organization, which is now a few months old, the latest version, and the way we're structured is we are structured to try to do something that usually big companies fail in, you know, regardless of industry, which is changing, you know, transforming your business when you're still ahead, transforming your business before you are in trouble. So in our management team, we have a couple of people who have very clearly the P&L responsibility of the ongoing.
Of course, like there is some room for e-signature, but it's still weak, and in this digital environment, it's quite surprising. Teppo, I have a question about like also competition aspect, and because what we heard is like very much that, okay, for some policymakers, and what we heard from the Commission mainly is like, yes, banks are afraid of competition. They don't want to embrace this digital era. According to your speech, like BBVA is really much active and also like engaging with startups and facing this competition, and it's like more focusing on customer experience and innovation. What do you think? Could you elaborate more on that?
Yes, with pleasure. I also would like to kind of react to this. Regulation, like any rules, will typically create also something you didn't expect it to create. And